Right now, something important is discussed. And the financial system millions rely on is quietly failing under unseen structural pressures. The disturbing question is, how much gold and silver is truly enough to survive the chaos expected in 2026? History shows that during market collapses, precious metals consistently become the ultimate measure of security and liquidity for survival. Origins of this dynamic stretch back centuries, from early civilizations using gold and silver as universal currency and wealth storage. Modern central banks hoard massive reserves, controlling markets while creating illusions of stability over a fragile, deeply leveraged financial system. Key figures have manipulated gold and silver supply for centuries, keeping the masses unaware of systemic risk beneath the surface. Rising demand for metals typically coincides with inflation, political instability, and economic uncertainty, confirming metals as reliable crisis assets historically. Artificial stability created by low rates and money printing encouraged risk-taking, while disconnecting asset prices from underlying real-world productivity permanently. Breaking points occur when confidence falters, triggering cascades of liquidations, margin calls, and market panic across multiple interconnected sectors simultaneously. In 2026, tipping points may coincide with record debt, illiquidity, and speculative excess, amplifying market reactions beyond historical precedent globally. Even subtle early cracks can cascade violently due to automated trading, interbank exposure, and high leverage in global financial networks. The fallout will impact retirement funds, corporate portfolios, and general confidence in fiat currencies worldwide, with immediate, far-reaching consequences. Failed fixes are inevitable, as central banks inject liquidity. But temporary measures cannot resolve structural weaknesses underlying systemic collapse entirely. Modern parallels exist: short squeezes, algorithmic trading shocks, and retail-driven disruptions show even large institutions are highly vulnerable. Social media accelerates market psychology, spreading panic instantly, and amplifying volatility faster than anyone could predict or control effectively. Shocking data reveals global debt exceeds $300 trillion. Derivatives exposure dwarfs global economic output, and leverage ratios remain historically extreme today. Calm markets breed complacency. Minor shocks escalate quickly. Interventions often fail to restore confidence fully or prevent systemic collapse effectively. Cause and effect is clear. Over-leveraged positions magnify losses. Herd behavior amplifies volatility, and interconnected markets transmit shocks instantaneously worldwide. Recognizing these dynamics allows strategic allocation in gold and silver before chaos overwhelms unprepared investors, preserving wealth efficiently and effectively. Structural fragility spans equities, real estate, bonds, and commodities, making shocks in one sector cascade violently throughout multiple asset classes globally. Automated trading and algorithmic systems amplify volatility, creating feedback loops that force participants to act decisively or face catastrophic losses. Historical cycles show preparation is critical. Understanding liquidity, leverage, and behavioral dynamics allows positioning in metals before widespread panic occurs. Gold and silver retain purchasing power, providing liquidity, stability, and safety, while paper assets collapse or become worthless in volatile markets. 3 takeaways emerge. First, the system is fragile. No institution is immune from cascading shocks that destroy confidence quickly worldwide. Second, precious metals provide security and asymmetric opportunity during volatility, allowing investors to preserve wealth and profit strategically during chaos. Third, timing and strategy are essential. Acting too early or too late can dramatically affect financial outcomes during market disruption. The warning is clear. 2026 will expose decades of ignored financial weakness. Complacency will cost those unprepared their wealth permanently. An open-ended thought remains. Are you prepared to navigate the chaos, or will you be swept aside while others profit immensely? Recognizing liquidity trends leverage and behavioral signals allows early positioning in gold and silver to protect assets and exploit opportunities. Observing debt levels, margin calls, and systemic exposure provides early insight that turns disruption into profitable wealth preservation strategies consistently. History proves crises follow patterns. even if exact timing remains unpredictable. Offering disciplined observers enormous potential for strategic advantage, the 2026 environment could make gold and silver essential both for wealth preservation and extraordinary financial gains when positioned correctly. Panic punishes the unprepared. While disciplined investors can capitalize on volatility through knowledge, research, and precise allocation of precious metals effectively, timing, strategy, and risk management are crucial allies in exploiting market dislocations without succumbing to chaos or irrational behavior financially. Even the largest banks and supposedly secure portfolios are vulnerable to cascading shocks when structural fragility is ignored for decades. Those acting early can allocate capital efficiently, mitigate losses, and benefit from rapid price spikes as panic spreads throughout markets globally. Misjudging timing or exposure can cause devastating losses, while strategic positioning allows transformative outcomes during periods of extreme volatility permanently. Market warnings are rarely obvious, but understanding leverage, behavioral dynamics, and systemic weaknesses enables informed strategic decisions during crises. Crashes do not wait for preparation, but preparation defines financial outcomes and allows wealth creation, while others struggle under panic-driven conditions. Understanding interconnections between assets helps predict shock propagation and identify where gold and silver maintain value and liquidity during crises. Automated trading, global connectivity, and high-frequency systems accelerate market movement, making early detection and decisive action even more critical. Behavioral feedback loops amplify technical shocks, punishing the unprepared and rewarding participants who are positioned strategically with tangible assets. Crashes are financial and psychological phenomena where perception, emotion, and reaction exacerbate systemic consequences far beyond initial triggers repeatedly. Opportunities appear when panic overwhelms rationality, creating asymmetric risk-reward scenarios exploitable with knowledge, discipline, and timely action in metals markets. Gold and silver become essential for wealth preservation, liquidity, and generating asymmetric gains during periods of systemic financial disruption decisively. 3 takeaways emphasize strategy. First, recognize structural fragility. Second, value precious metals as insurance and profit instruments. Third, prioritize timing effectively. The warning is stark. Systemic weaknesses in 2026 will be exposed, and complacency will result in permanent losses for unprepared investors globally. Open-ended thought. Will you position yourself to benefit from market chaos, or will you be overwhelmed while others profit decisively and rapidly? Monitoring liquidity, leverage, and behavioral signals enables early positioning, protecting capital, and converting disruption into opportunity effectively and safely. Historical patterns indicate preparation is essential. Those observing warning signs consistently convert crises into transformative wealth if executed correctly. The 2026 crash emphasizes understanding real assets, especially gold and silver, as tangible safeguards against currency devaluation and systemic failure permanently. Panic destroys unprepared investors, while disciplined participants positioned strategically can thrive using precious metals as both insurance and wealth generation tools. Timing, research, and risk management remain critical for financial survival and wealth accumulation when systemic fragility and volatility peak globally. Recognizing the value of tangible assets ensures purchasing power retention when fiat systems collapse and paper wealth evaporates quickly and unexpectedly. Subscribe now to stay informed on early warning signs, precious metals positioning, and strategies to preserve and grow wealth during market turmoil. Acting early and decisively provides the best chance to capitalize on disruption, maintain liquidity, and protect assets from systemic financial failure completely.